All right, Samir. I was criticized when I said on Saturday that it's a no-harm budget and markets will not react negatively. Markets fell. People took notice of what I said. I was trolled, criticized. But then markets are back to where they were on Friday. What's going on?
Well, morning, Nikunj. I think the way it works is when budget came on Saturday, I think people had a lot to digest. Now, once the fine print was out, I think to be fair to the finance minister, the numbers look believable at first. So this is like most budgets, you had an event for 2 days, a lot of things were spoken about it, written about it, but then we are back to earnings. I think what the market is trying to tell us is that perhaps the belief that the long pending earnings growth revival is now likely to be around the corner. I think that belief is getting more and more strengthened, because what is happening is that today you're seeing the PMIs at a 6-month high. There is enough green shoots available so as to make the case that yes, there might not be a broad brush or a all spread revival, but at least in pockets you're likely to see some positive news coming in. I think that is what the market is trying to price in earlier than at the event, and that's the reason why the 2-day reaction is done and people are back to looking at what the results are, the Titan results, the Bharti results, etc., etc. So I think budget, as long as the nominal growth number is okay, the fiscal deficit number looks okay, the revenue expenditure could have been definitely better. So to that extent, there also the believability quotient is quite high, that the government has taken a 12.7% growth in revenue on a YOY basis, which itself tells that yes, they are expecting some sort of a moderation in the revenue line and they are okay with it. So I think these are things that probably people like, and that's the reason why, although you're right that on Saturday it fell, but the case could also be made that Saturday was not a completely normal day for business because the participation levels were low. And
if
therefore,
markets would have not recovered, would you have said the same thing what you're saying about budget?
Nikunj, actually, if you see, even historically, budgets typically tend to be a 2-3 day affair as far as India is concerned. So yes, maybe the rebound may not have been as sharp as it was yesterday, but despite that, I think budget would have been done and dusted with after 2 days.
Okay. But this time around, given what's happening to the coronavirus, how this time the auto industry per se is one of those sectors where the mood is not great. Historically, the Auto Expo has been used as a forum to launch new cars, launch new technology, talk about which way the auto sector is moving. But that entire zing of late has really faded away from an Auto Expo, and we also understand that less and less companies are now really showcasing some of the futuristic models. But I'm going to move away from Auto Expo and talk about something which is of immense market curiosity. Samir, Morgan Stanley feels that Tata Motors, it's a thandi chai. Tata Global, it's a thandi chai. Their margins are not great. Domestic business is suffering. Except in coffee, nothing is great there. What is your sense?
Nikunj, I think one has to give the new management time, because I think it's a good franchise. Earlier they had legacy issues. Tea was a large mover in the business, but then now with the entire consumer franchise coming in, I think one needs to give them time. And the fact is, the current management who's now in charge has had a fantastic legacy. So let's see what he does with it. And given the platform and given the products that now they have at their disposal, I think you need to be patient. Valuations may have run up in the short term, but that's fine, because typically these are franchisee business. So we might get fussed over something going at 40-50 multiple, but because there is certainty of revenue, because it's a franchise business, you are likely to get that free cash flow ROEs going for a considerable long period of time, which is not visible elsewhere on the market, and hence these businesses will continue to remain pricey. So I think apart from a short-term basis, one just needs to be patient with these franchises.
Samir, Nestle is the most expensive consumer stock in Asia now. That's what the data says, 64 times. And the stock is hitting a new high on a daily basis.
Again, Nikunj, I think, there a lot of the money that has probably gone in over the last couple of days, that you found that the crude fall to a 13-month low is actually very sentimentally positive for a oil importing nation like India. So therefore you saw a lot of ETF flows. Now typically, because now Nestle is a part of the index and a Nifty, and it is not such a large regularly liquid name, so any amount of ETF flows are likely to give you a much larger disproportionate price movement in the stock price. I think that could possibly partly explain the short-term price movement. But I think apart from the fact that yes, you're absolutely bang on that 60 times forward, it's not exactly a right risk reward for somebody to be allocating fresh capital. But yes, we've seen stocks can continue to remain overvalued for a considerably long period of time. and probably this might be just one of those cases.
Who are these guys who are buying these stocks? I mean, every fund manager who's come on our show is saying consumer staples are expensive. If they go higher on a daily basis, somebody is buying them. Kunal and CK tell me these are overbought stocks, so technically it does not make sense to buy Nestle. Prashant Jain, Sami Narayan, S. Narayan, or even Navneet Manod, they say they're expensive. So I want to know who are these folks who are chasing these stocks?
Nikunj,
I mean, FIs also understand what is 64 times, right? Those are sensible investors. So for folks who are buying it, are they buying it for something what we are not understanding today? It's a question, honestly, which is puzzling me. Because see, when we say 64 times it's expensive, it's public knowledge. I'm not saying something which is like hidden under a file or something. So if a sensible investor who's a global investor is buying them, what is the understanding here?
I think Nikunj is very clearly passive money. Once it has, if an ETF has to come and allocate, say, X amount to 50 Nifty names, now you are likely to see the price impact being more pronounced in a stock that does not trade that liquid volumes on a regular basis, of which you will find probably most of these FMCG names, be it a Nestle, be it a Lever, be it a Britannia. I think all of these names qualify under that criteria. So probably, yes, you're right that conventional investment wisdom will not, allow you to go and bid a 64 times forward stock on a pure return generation objective. But in case there's a passive flow coming, it has to get marked across all 50 names proportionately. I think that's the nature of the beast. So the passive flow is what perhaps is right now swinging on the shorter term basis more the price move rather than any valuation on a fundamental asset allocation.
To Bharti, Sameer didn't chat with you about that. What did you make of the numbers, and would the numbers now compel you to buy afresh into Bharti, or is that something that you'd recommend to any of our retail viewers?
Well, Aisha, I think the number clearly says that you have had after the entire tariff move, and that is also a fact that now from an industry standpoint, I think the pricing, the worst seems to be behind us. Now, if that is the base case, then what we are seeing, this is the first number where the management themselves have said that the entire quantum of tariff hike is not yet factored in. And despite that, you've seen the ARPU going up to 135, from 128 on a Q-on-Q basis. The data growth is good. So I think these are good tidings from a sector as a sector perspective. Talking about Bharti, well, the loss has actually come out because they are actually making the provision for the AGR. Now, if you take that off, EBITDA margins are strong. It's a 42% plus. So I think the business is today on a 9 months basis, net of your capex, it is generating a free cash flow of almost $1 billion. So I think gone are those days where these businesses actually didn't have money to upgrade technology, enhance user X. So I think all those things today are no longer relevant. So I think going forward, if I were to take a 2-3 year view, Telecom may be the new way of playing the consumption in India. So I'm not saying that these stocks will again go back to the FMCG 60-70 times forward, but yes, they can definitely trend up on a secular basis from the current valuations.
Let's focus on a couple of the other earnings. Cipla is going to be in focus today, as well as a bunch of other pharma names. Sameer, are you positive on pharma at the moment? Just before the budget, we saw that uptick coming in, a lot of positive commentary. Where are you when it comes to some of these pharma names?
Well, Abha, I think pharma, the domestic formulations market has been showing some healthy growth trends of late. So I think that's where that's getting some amount of optimism back in. Plus the whole thing that the genericization wave is likely to hit margins for most of these branded players, and the Jan Aushadhi scheme. I think the very fact that the allocation and the budgetary outlay for that scheme has not been enhanced appreciably means that you're not likely to see life change too drastically in the near future. So I think that is another positive. And I think the US market is also showing some signs of in short pockets for case-to-case basis for some companies, some amount of product gains or those kind of one-off revenues or market share gains coming in. I think that's where is leading to all these sort of short-term optimism. And most recently, I think this entire coronavirus episode has probably led investors to go back and look at the pharma names, because if at all, whenever some sort of preventive or a vaccine has to come out, then it has to be from this sector, and that's where people will start taking some sort of bet, because given the magnitude of the epidemic, I think it would be a fairly sizable market to address. Having said that, I think today at least the current treatment protocols clearly suggest that it is like one of those dengue ailments that there is no specific cure. So all that you need to do is pack the body with a lot of other antibiotics so that the immunity levels which drop don't lead to any other infection which then sort of can prove to be fatal. I think so but these are evolving situations, so maybe that's the reason why there's a lot of appreciable interest in this sector for now.
Samir, is that your view as well? And would you be willing to put money into real estate at all to begin with?
Well, Aisha, I think real estate saw a lot of move up in the last couple of months because there was expected to be a lot of budgetary SOPs. Now, unfortunately, even after reading the fine print, one doesn't see that there has been a specific measure that has been done to, give something to this sector. Now, yes, there is a large overall consumption, consumption help that has been provided in terms of the new tax slabs, etc. But I think the sector, real estate per se, has not been given any specific treatment. So maybe there is some amount of disappointment on that, and the valuations had actually run up quite a bit. And the underlying sales in terms of the stock getting absorbed on the physical inventory, that has not changed drastically anyway. So although affordable housing is a continuing theme, but as far as the listed names are concerned, I don't think there is too much of a play there. So I think it would be slightly the risk reward is right now not very favorable to be looking at immediate allocation to real estate at these prices.
We're watching out for HPCL numbers today, of course, and BPCL, since Kunal's talking about it, so it continues to be, in focus. The government constantly announcing updates on their divestment plan. LIC was the big one that everyone was talking about post the budget as well. You think they're going to achieve their target this year?
Well, Aisha, I think the statement of intent that from last year...
It's Abba.
Sorry.
Aisha? Abba. We know you're
Okay. So, I think the 1.05 lakh divestment target that was set for in the budget in July, I think that has been hiked to 2 lakhs. Now, there itself is a very large number. So there one has to give government some, support that these guys would have figured out as to how will they actually do this. Now, BPCL and SCI, as Kunal mentioned, the shipping corporation, the optimism in these names is because there is a divestment possibility. But so is the case with the Concor as well. And now with LIC getting thrown in and IDBI, the strategic sale. So I think today you hear that you will be likely to see bids which will be, the envelope bids and, those kind of things. So therefore, it will be much faster. And I think those are positive statements. But one needs to see how does the execution take shape, because LIC obviously will need to take some sort of a legislative action. But in terms of the market being open to investors, I think that's almost a 40 billion annual premium kind of a entity which will be available for investors to look at as to how to do things. And it will be interesting because then it will open up the market for a participation, and it will actually lead to a lot of maturity even on part of the investors, because you see in the US, etc., these franchises are very dominant, very entrenched. So an LIC would really be a real disruptor in that sense.
What is it that you're making of the ATC benefit now going away for insurance? Is this the dip to buy insurance names, or would you say that the damage could be far deeper because at least, most in India look at it as a tax saving benefit?
Aisha, I think if you look at the new tax slabs, I think, and one has to do the math on an individual basis as well, but one doesn't see too much of a, advantage for somebody to go in for the new slabs, because in the new slabs, you will not have LTA, HRA, standard deduction, nothing. So if one goes by that yardstick, for the professionals, it might be a different thing. So to that extent, there might be some element of compulsory savings that will continue to remain. So, and nobody just stops a policy just because there's no tax benefit available on it. So I think the argument that the flows will reduce and you are likely to see people stopping their policies, premium payments, I think that is slightly far-fetched logic at this point in time. So if the scare is on that count, I don't think that is material, and it will be interesting to see, because people will now try and assess. So in fact, what it has done is that the chartered account professionals and tax professionals would now be having a legitimate ground for them to be charging their clients higher, because now they have to make two computation of incomes to be able to ascertain the tax liabilities.
Okay. Computer will do it for you.
Well, I think, yes, it is nice, but at the end of the day, in India, it always works that you go to a tax consultant, you ask him, how is it looking in this and how is it looking in the other one?
10 questions.
Absolutely.
To justify his...
It's a high contact industry.
Still a year away.
Yeah.
Still a year away. Let's focus on this year's tax returns right now.
And this is income, more importantly.
Which in this market, very rare people would have had. So